Okay, right. In this chapter, or in this lecture, we're going to be looking, if you like, focusing on chapter 10. Yes, chapter 10. And we're going to be looking at a really nice little topic. Right. Now, first of all, just for your information, I mean, you will see how all errors, when we're fixing them, are recorded in your general journal. Right? Remember, this is a subsidiary book. So when we're fixing any of the errors we're going to talk about, we always record them in your general journal. That's the first thing to know. Remember, your general journal is used to record unusual items. Yeah. Whatever, capital, assets, things that just can't fit into the other 5 journals. Well, to be fair, even sometimes when it fits into the cash book, for example, if it was a big item, for example, if you bought a truck with cash, yes, you would record it in the cash book, of course, but also, we would also record it in the general journal just because it's unusual. It's not something that happens every time. Okay, let's carry on. So let's move straight away. Let's talk about the trial balance. Now, really, we're back on track, if you like, to what we're really trying to get to, this accounting equation. And we discussed that we've done all how we balance all the accounts, and we've talked about how we prepare trial balance. And sometimes I guess the question really is that, okay, you've done everything, you've got all your balances there. And for example, let's just make a mini makeup one: sale, purchases, expenses, capital, for example, and those are your debits and those are your credits. I don't know, that could be, oops, sorry. Let's get rid of that. So here we have 500. Here we could have, I don't know, 50. And here we could have 100. So if this is going to be 100, then I guess my expenses for this to balance this has to be 550. And so we're happy. 600, 600, and everything balances, and there's no problem. But really, this doesn't mean there are no errors in the financial statements. Okay, there are no arithmetic errors, I agree, and all your debits are equal to all your credits. I mean, you've done your double entry pretty good. Well done to you. But there might be errors. There might be errors, right? And if you are comfortable with the process of how we get to a trial balance, remember we start off with some source documents. Everything starts off with those source documents. Put those source documents into subsidiary books. Get the totals. Take the totals from there and put them, if you like, in the double entry. And then from the double entry, we do the balances carried down and brought down, and then we get here, trial balance. So we could have had certain things that just never quite happened and never actually feed into the trial balance. So for example, let's look at a sales day book. So we have a sales day book, and we have a Jack Jones, for example, and we have 5,000, and we have M. Michaels, 2,000. The total here is 7,000. And of course we know from our sales day book, so we had the invoices, chuck them in, sales day book, total 7,000. Then we go into the general ledger, and in the general ledger we have a sales account and a trade receivables account. Yes, we take that total, we debit trade receivables 7,000, and we credit sales 7,000. Okay, let me ask you a question. What if you totally forgot about M. Michaels? What if, for example, you'd never put in, say for example, this had happened. Let's get rid of M. Michaels entirely. You lost it. Say, for example, the invoice was falling behind the shelf and you'd never seen it. Well, you would never have recorded it, and you would only have recorded 5,000. And you would have taken over here, you would have taken 5,000. That's what you'd have recorded. And you'd have done your balances carried down, brought down, trial balance, everything would have balanced. But fundamentally, this would have been wrong because you had forgotten M. Michaels. This error, this very first error, is referred to as an error of omission. Yes, the error of omission. We have a situation where you just totally forgot to put the things in, to put the invoice in. I mean, I don't know, it could be an invoice, it could be a credit note, it could be to do with purchases. The key point is you just totally forgot to put it in. How do we fix it? Well, we need to update trade receivables. So you need to go into trade receivables. Right now you have 5,000 there. You need to go in and put in another 2,000. And same with sales. That's trade receivables. And that's sales. You have 5,000 right now. You need to go in and put another 2,000. So you can bring this up to 7,000, which is what it should be. Where do we record the journal? Because you see, this is in the general ledger, isn't it? So if you like, a subsidiary book for recording that is the general journal. Yes, I'll say that again. The subsidiary book for recording that is in the general journal. And in the general journal, remember, we always record things using the notation debit trade receivables, 2,000. Credit sales, 2,000. And you state what the reason is, being the correction of the error of omission of invoice, whatever, for 2,000. Yes, you write it out, being the correction for the error of omission for a certain invoice. And this is the error of omission. This error is not picked up by the trial balance. Yes, there's still an error, but your trial balance is balanced okay. Something had to happen. Either later on you found the invoice, or the customer called you and said, "Oh, I thought we owed you 7,000." That invoice, or we haven't received an invoice yet, or they send you the money without an invoice, something along those lines. But something else externally usually has to happen for you to find this type of error. You're not going to find it by just looking at the trial balance to sort of say, well, both sides did balance, so we know there's an error. You won't find that out from the trial balance. So that's the first error, the error of omission. Right, let's look at another error, something else that could happen. So let's go back to that sales day book. Yes, let's go back to that sales day book. And we have J. Jones and M. Michaels. So say, for example, this is what the situation was. You were supposed to put in 500 and 200, and that was a total 700. And then you were supposed to, of course, as usual, sales, trade receivables. So you were supposed to go, 700, 700. Yes, debit sales, this is income. Remember the accounting equation. I goes up, asset goes up. Okay, but you then, for some strange reason, you actually put in 5,000, in here. So this becomes 5,000, this became 5,200. So you had gone in and put 5,200, 5,200. Because this is the figure we always take, isn't it? 5,200. So you can see there's an error here. I mean, the trial balance is okay, of course. It will balance okay. But you can see there's an initial error. So there's a problem. Yes, there is a problem. So this is referred to as an error of original entry. An error of original entry. Where you have put in the wrong number initially. Right? But somehow, the error has occurred before you go to the trial balance. Sorry, before you go into the ledger. Because that's why both are, you could have, in fact, all this could be fine. You could have, let's erase this. Let's create another one. In fact, I mean, you could have this situation here. Okay, you could have had this, no problem. And then when you went in here, for some strange reason, oops, 1 second, I'm trying to get my thing to work, right? There you go. For some strange reason, you could have put 7,000 here. I don't know. You could have been in a rush. So it's still an error of original entry. Just the error is made here. Initially, we made an error here, where we added wrongly. So this is referred to as an error of original entry. So the question is, how do we fix this? Let's use a different color. Well, for this type of error, where we have this, it should be 700. but you've gone 7,000. Well, we want our balance carried down to be 700. I mean, the aim is we want this to be 700. And in accounting, we do not cross out. So we don't say, oh, cross this out like that and cross that and just put 700. Or erase it. No, 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 no. We don't. No. So what we have to do is look for a way of reducing this figure so that we actually get 100 as our balance carried down. And that must be 6,300. Because when you put 6,300 on this side, what you're going to have is you're going to have a balance carried down of 700. And you're going to have 700. So you have arrived at the 700 that you always wanted. Yes, please watch this again if you're not sure. We're just playing with T accounts. You have that 700 come down here as well. So you have achieved the goal of 700. We had to do this because we can't cross out the 7,000s. We're not allowed to do that in accounting. And we can't use TIPEX because that's covering up. So what we have to do is we have to look for a way to fix that. I mean, it could have been the other way. We could have put 70. If we had put 70, then we would have put an extra 630 on this side, right? And an extra 630 on this side. So the key aim is look at the T account and find out what it is you need to do to make sure you get the correct answer eventually. And this is referred to as an error of original entry. Let's look at another error. Yes. Let's go back to our sales day book. Let's stick with the sales day book right now. So we have our sales day book. And let's go back to say J. Jones, 700, M. Michaels, 200, and we have 900. That's our sales day book, and there we are, sales, trade receivables. What happens here? So we know that we should credit sales and debit trade receivables. So what do? Instead of crediting sales and debiting trade receivables, you debit sales and credit trade receivables. Well, I mean, of course, the trial balance will be fine because all the debits are equal to all the credits. But it's wrong. It's wrong. You should have credited sales and debited trade receivables. The question again, of course, is how do we fix this? Let's use a different color. Well, if you just put 900 here, what are you doing? You're bringing all this back to 0, aren't you? But your plan is, your aim is to have 900 on the credit side overall. So you have to include another 900, or if you like, you could just have put 1,800 on the credit side, 1,800 on the debit side, which means that the carried down here, of course, is 900, yes? And so eventually you do get or arrive at your 900. Your brought down figures will be 900. I mean, you could have put 1,800 straight away, and then, therefore, But the key point is that our aim is to have 900 on the credit side and 900 on the debit side. By simply just putting it in once, will only bring it back to 0. Bring this account back to 0, so you have to do it again. This is called an error of reversal of entry. Right? And all these errors, all we're doing right here, so this situation here where we have the 1,800, in the general journal we would go credit sales 1,800 and debit trade receivables 1,800, being the correction of the error of reversal of entries for the invoice or for the amount. Yes. And that's how we would fix it. So you can see that we're dealing with errors that cannot be picked up by the trial balance because both sides will still balance, but in actual sense they have been errors. They have been errors. And of course this will in the long term affect the accounts if you don't fix them. So that's why they have to be fixed. Let's look at the 3 more errors. Let's look that the trial balance cannot pick up. Let's look at them. Now, say for example we had a situation where we had, let's stick to, why not? Let's just stick to, let's try something. Let's go something different. Let's go to the cash book, for example. And in your cash book you have, if you like, you have rent and water. Say rent is 200 and water is 300. And of course you know you have rent water, bank. So you're fine here. 200, 300. I want to emphasize, I'll talk about this later on when we come to discuss the other errors. You can see how your cash book looks exactly like your bank. Yeah, and many businesses just keep a cash book. They don't prepare another T account for the bank. We're just doing that. That's what they really should do, but we're just doing that. You know, we're just preparing one, but this just to show the double entry. But really, many people would just are happy to use this cash book as a second part of their double entry. But the key point is that you can do the double entry. It's still the same thing. You're just duplicating the bank and the cash book. I mean, that's all. And of course, the rent is 200. And the water is 300. These are expenses, yes. And we debit expenses. Now, you could have a situation where instead of recording the 300 here, yes, let's get rid of that 300. Instead of recording 100, yes. Instead of recording the 300 in water, you could have put the 300 sorry about this. Yes, you could have put the 300 here. I mean, overall, all the debits are equal to all the credits, but this is wrong. What you're saying is that we have rent of 500 and water of nothing. But no, that's not the case. So your trial balance is fine, but the counts are wrong. And how do we fix this? Well, it's pretty simple. All you do is we need to get 300 out of here into here. So we put 300 here and 300 here. So credit rent and debit water. And of course we write that entry in the general journal by debiting water and crediting rent with 300 and 300. Being the correction of an error of, we call this the error of mispost or commission. Yes, this is an error of mispost or the error of commission, where we have put in, and I need to discuss another error to really come back to this error. But what you can see here is these are both expenses, you see, and I fundamentally just, within the same letter, I mean, still within expenses, I just, overall, my profits will stay the same. My profits will not be affected. Yes, because they're both expenses. I've just put two expenses in one expense. But they're all expenses. Yes, and this is referred to as an error of mispost, an error of commission. So that's how you fix that. Yes, and you record that in the general journal. Right. Let's look at another error. While I'm here, let me just do this error here. So say, for example, I had a truck. Right? Say, for example, I had a truck. And say this truck was for 5,000. And that's my truck. 5,000. Now, let's just fix these other errors. Let's go back to, oops, sorry. Yes, let me get rid of that. So everything is fine. Yes. Here we have 5,000. So we have 5,000. So this is how everything should be. But for some weird reason, you didn't put this 500 here. Let's get rid of that. You would put that 5,000 here under rent. I mean, all the debits are equal to all the credits, so the trial balance will balance, but this is wrong. What's even more wrong is that this truck you see is an asset. So straight away what you've done is, overnight, you have increased your expenses by 5,000. And by increasing your expenses, remember that profit is income minus expenses. By increasing your expenses, you have reduced your profit by 5,000. Haven't you? And so, of course, the way to fix this is pretty simple. Put 5,000 here and put 5,000 here. Of course, that's fixing it. But in terms of what these errors are called, this is referred to as an error of principle. Because you have crossed categories, you have crossed boundaries. You have gone from an A asset to an E. You could have gone the other way. You could have put the 200 with the truck. in that way you would have increased your profits, wouldn't you? Because you would have reduced your overall expenses. So when we cross categories, we refer to that as an error of principle. And when we just cross accounts within the same category, that could be within A or within AL or whatever, within the same category, we refer to that as an error mispost. Okay, right. So let's do the final. So that's 5 errors we've done. Let's just do the final error that I want to talk about. Yes. And we can have a simple situation. Let's stick with the cash book. I mean, there's such a range. There's really a weird range of this. You know, it could really materialize in so many ways. But this is referred to as the error of compensation. So where you have errors compensating for each other, you know, and where we can't really see, you know, so we have rent, for example, say 500, water, 200, right? And let's just have rent and water. I mean, I'll just use these two to explain the myriad of different ways we could do this, you know. So you have 500 here. Sorry, oops. No. 1 second. So what you have is, let's have 500 here and 200 here, right? Because, of course, this is the bank. I'm not even going to make a bank account right now because I'll just be duplicating this, technically, right? Imagine I had done this. Instead of 500, imagine I had written 400, right? If I write 500 here, if I write 300 here, overall, this is 700, and this works, right? 700 matches, but these are wrong. So I have an error here compensating for this error here, right? Or the other way around, whether this error here compensates for this error, but the key point is I have 2 errors here. So the only way to fix this, if you like, is I need to add 100 here, and I need to take off 100 here. And this is now fixed. You could have a range of errors. I mean, let's bring something in here. Let's just say we have here sales, cash sales, and this was 800. I put the sales, and this should have been 800, right? And let's just go here again. Let's correct all of these. Let's put in what they should be. So rent should have been 500 and water should have been 200. I mean, say for example, I had mistakenly put 400 here. Well, I could have put 900 here. So overall, when we do our, if you like, our trial balance, yes, the debit side has gone down by 100 by this mistake of 100, but I've increased also this side by 100. So you'll see that overall that your trial balance will balance because this error here of 100 is being compensated for by this error here of 100. But this error is a fall, and this error is if you like, is going up. So you know, the key point here is that we have errors compensating for each other, and you'll see some examples as you go along. But the key point here is that what you need to do is you need to reverse those errors in those accounts. Yes, and in this case, what we would have done is to actually, sorry, I think wait 1 second. I think what we're doing here is if I'm going to add 100 here to bring this down to 500, so this must have been 700. Sorry, let me just fix that. So this is 700. Sorry. So if you're going to put 100 here, you need to put 100 here. So this went down by 100, and this also goes down by 100. So you need to increase this by 100 and increase this by 100. Yes. Right. So yes, there you go. So what we have to do is on both sides, you need to, if you like, make up for those errors and compensate for those. So let's go to our, let's quickly tie this up. We have, and this is referred to as an error of, these are referred to as errors of compensation. Yes. Let's quickly look at the PowerPoint. Just look at what they are very quickly. It's a bit slow on today. Okay, here we are. Yes, let's just go here very quickly. Let's just summarize very quickly. Error of omission was the first one we started with. You completely forget it. The entire entry has been omitted. Error of commission, like we've talked about, also known as the error of mispost. We're within the same category, same class, same family of accounts. For example, 2 creditors or 2 debtors or 2 expenses, all within the same class. Error of principal, but this time you're going across categories, across classes. Error of original entry, you've put in the wrong number. Yes, but you've put in the wrong number sort of for the debits and the credits. You know. Then we have the error of compensation, which we've just talked about. Yes. And I think here that's really great. We didn't talk about the error of reversal of entry. Was that mentioned first? There is an error of reversal of entry, which is the 6th one. So you have 6 errors. Yes. Error of omission, commission, principal, original entry, compensation, and reversal of entry. Yes, great stuff. So these are errors that the trial balance will not find out just because both sides of the trial balance still balance, but you're not able to find those out. Okay, we're going to talk about the errors that the trial balance can find out in a second. Yes, and that'll be in the next lecture. Okay, great stuff. See you then.